The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil, Chapman sitting in for Tommy O'Brien. I usually do the Tiger Technicians Hour at 10 o'clock, so I'm doing this first. This is Tommy's show. This is the Morning Market Kickoff, and we're looking at the Dow. The futures are up 15 points. I have a technique that I've developed over the years, decades, that I used Richard Arm's Trin Index. I use this. I only use two numbers. One is at the top, one is at the bottom. Otherwise, I have nothing to do with this particular indicator. And when the price is when it has an intraday reading very high, it means that overnight to the next day, the S&P future should have a good rally. Even if there's a strong dip, it should have a good rally. Be prepared for it. And if the index is very low, it means, as far as I'm concerned, with a really high percentage accuracy rate, that the Dow, no matter how much the futures are up prior to the open, will at some point, usually it's early in the morning, but it could be a little later on, get a pullback that takes it negative. So we'll see if that happens. I'll be here during the opening of the show, so that'll be opening market at 9:30. Let's get on. We've got the S&P, that's the E-mini, trading right now at, did I hit the wrong thing? The E-mini, let's say that again. Here comes the E-mini. The S&P E-mini is trading down 2.75 at 5243. I need to just show you this for those of you who are not used to my work. I have a technique that basically said, I should go to this one, I guess. Yeah, this is the one. That says, identifying a low bar and then seeing higher prices. There's an alphabet that I use. I just go from A to G. A, peak A, then the higher peak is peak B, peak C, peak D is the fourth peak, and then it can go all the way to E, F, and G. There's never an H. With that technique, it says that at a peak D, your obligation in this particular instance is that if the price gets upgraded to a buy mode, there should be at least 4 higher peaks. That fourth highest peak, peak D, is where you have to reassess, but your objective is to get to at least a D. Well, we're going to see what happens then. So in this particular instance, look right here in the E-mini, that's a peak D in the weekly chart. Look how sharp. That's the biggest pullback you've had, and yet the 9-period moving average is still very strong. Look at the daily chart. Peak F was the last peak back in April. It pulled back very sharply from the 53.40s down to the 49.50s and has a very strong bounce. And that in the futures has gone to a leg C because yesterday had a high. So that becomes a C. Today is still a leg C. You've got to wait for the entire session. This is the future, so you have to wait until it closes at 5 today, Eastern Time, to see whether or not you've made a peak C. But wait a minute, the cash index has got you to a peak D, and that's really interesting. So for the futures, we're using the peak D in the weekly chart because there's only a peak C in the cash, but the cash has already given you a peak D. And that's going to be very interesting because it was a doji candle, then an inside bar, and yet look at the technicals. The 9-period moving average in the daily is way over the 14. You've got a one, so far you've got a 1-to-1 to the upside. I can now extend that using Chapman wave falling axe formation technique and say, let's take it from here, the break to the upside right on that candle. And that takes you to 52.50, just above the previous high, but underneath the 52.64.85 high. And the MACD is strong. The relative strength is flattened, but it's still very good. That's the gray line right there. The stochastic at 95%, that's your ideal situation where you've got a flat stochastic in the 95 area, and that just says as long as it's flat, that should continue to be a positive. Doesn't say you're going to keep going much higher. It just says it's a positive, and any pullback should have very good support. The unbalanced volume, the blue line, is still under, it's not overbought yet. It's pulling back a little bit. So all the technicals are actually quite positive there. Looking at let's go to the futures. We'll go to the NQ. The NQ right now, the futures are down 26 at 18,268. It's made a peak C, yet the QQQ, this is the cash, the ETF, is at a peak D, just barely below the Friday high with yesterday's high, and that does make a peak D. Doesn't matter, 1 penny lower, and that makes a peak. So, and all the technicals are still very strong. The unbalanced volume, that blue line is a little bit overbought. That says, yeah, be ready for a little bit of a pullback. Okay, let's go to the IWM, and this is going to be most important. Why? Because the IWM at 205, 206.78, up 2.04 right now, that will take it. Let's just see, that was a peak D. 206.62 was the high on Friday. So that's the level that we need to get to in the cash. In other words, you have to wait for the open. Pre-market, it could do anything. As 9:30 starts, if it goes after that, if it goes above 206.62, that started a leg E, and the potential, I don't even want to talk about this, but it's a potential for Chapman Wave instant restart at a peak D. I don't even want to go there yet. Let's just wait and see what happens. I do want to go to the SMHs, which just stalling. They're stalling a little bit down 76 cents at 222.50. Had a peak D right there. Yes, the Chapman Wave falling axe. Oh, there's a falling axe formation. Let me just get this up, and I'll explain it right now. It's this pattern where the price goes much, much higher, and then it starts to make lower highs and much lower lows. Look, there it is, much lower lows. And I usually call this a Chapman Wave inside track resistance support level, propellant or repellent zone. And you see much lower lows. Well, what happens is it suddenly forms a base, and it makes either a V-shaped recovery going above that trend line, that up or down trend line, or it makes a cup formation. This is almost like a V, but think of it as at least retracing upwards. So the next level of resistance will be in the SMHs will be 227.57. Well, that's quite a way. I mean, we did 225 the other day. We went to 225.44. We'll just see what happens. But yes, you're inside. This is the Chapman Wave falling axe formation in the weekly chart. So far, the SMHs are doing okay, right? Okay, I want you to get to gold. Gold is up $13 at 2356. I did like this pattern. The 9-period moving average crossed positive. Look at the silver. Silver's always much, not always, but lately has been much stronger than the gold. Silver is up 0.32 at 28.77. It's going to be very interesting to see whether or not it goes much higher. I need to actually ask a question of my engineer. I'll do that just in a moment. Ooh, did I just hit something? Did I just buy something by mistake? I hope not. All right. Okay, got that. All right. What we need to do right here is I need to just tell you that the silver contract is making that cup formation. I didn't draw this in. I should have drawn it. I think I had it, and then I took it away because it was looking a little messy. I don't like messy charts. That's almost like a falling axe formation right there. And I would have to take this lower trend line from there. There we go. Now you can see it's actually like a channel, and we've gone above it. And I need to move that away. Yeah, this is a good sign, at least for silver. Wow, we're running out of time for this particular segment. And look at copper, up another 8 cents at 4.84. Isn't that should be a good economic barometer? I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, we're back and we're looking at, if I can just see this particular chart, where is it? I just need to see the exact time. Why is that not Basil Chapman? Yes, sitting in for Tommy O'Brien. I've moved it up. Now I can see. Okay, 918. Got it. All right. So look at high-grade copper. High-grade copper is either recycled to the upside or it's getting close to some kind of topping action. But if you're looking at the technicals, on balance volume says, yep, we're really getting a very near-term toppy. That doesn't mean to say it has to turn around sharply, but it's getting near-term toppy. This is a leg D in the weekly chart and a leg D in the monthly chart. But the way that it's acting, it says that continuous copper could go to the high of 2022. That was in March, and that was 5.214. This is a continuous contract. That would be very positive, and I would even have to say, in terms of economic action, used to call it Dr. I don't think they call it Dr. Copper anymore, but copper, strong copper says there's international. It's not just building, but it's really it's the economy using copper is always very good. When copper is rallying like this, it means there's a demand. All right, so that's kind of important overall. Now, let's go back to, I had a question. If I can get to the question, let me just see what it is. Basil, why do you think this, are the small caps now going to have a decent rally? Wow, that's a great question. Look, let me put it this way. The IWM, the Russell 2000, has been lagging. It had a high of 244.46 back in November of 2021. And then it plummeted. It plummeted down to the low of October 23. That was the general market low of 161.67. Let me just type that in, 161.47, and that was 10/20/23. All right. So with that said, what we're looking at here is that the 9-period moving average in the monthly chart is still very, very strong. The price has had a decent rally from 161 up to the 210, and now it's pulled back and it's at a 204. But it's definitely this dreaded H pattern, the lower. Another technique I need to discuss. Let me just get to it right here. So the dreaded H is this pattern right here, where the price comes down sharply and then makes an arch formation, fails at a peak A or a B, and then either takes out the left side low, which is a very big negative if it continues lower, or this is exactly where you want to see a rebound. And if the rebound takes it over that peak A or B high that was made in the arch, that is very positive. Then you can go all the way to the next major left side icon. It could be a gap, could be a doji candle, could be the previous high, etc. Well, if you think of it that way, then what we're looking at here is that the IWM has done that. It went from a lowercase h to a lowercase m, and then that continued with a second arch, but it's really a very large arch formation from the low of 2022 to the fractionally lower low in later in 2022 to the low of October 2023. And now what happens is, the way I developed this, trial and error, right? That's the only way you can really do these things. Yeah, you can try to do mathematical formulas and all sorts of things and cycles. They have a place, absolutely. But the biggest thing for me is how something either fails or corrects or retraces. And this particular point is that the huge cup formation that you can see here and this arch formation with all those highs, even that previous high right there in the 204 level. Oh, wait. Uh-oh. I did do something. Uh-oh, I have to, give me a second, please. I need to do something. That was positive 48. All right, let me just do this. I didn't know I did it. I heard the little pink come up, and by mistake, I did do a little buying there. I wouldn't have. Now I'm in trouble. Anyway, we'll see what happens. So in this particular instance, we're looking at a couple of months that went above that high, and now once again in price, we'll see if the high that was made back in December 2023 at 205.49 on a monthly basis, are we going to go much higher? That's going to be the big issue. Now, a couple of things coming up is that the weekly chart has had a very nice retracement, about a 2/3 retracement from the recent high to the low, and the 9-period moving average held beautifully instead of going pink when there was a very sharp pullback. It held green. That is like a spring. That's like a loaded spring that says, hoo, hoo, hoo. If you go back above the 9-period moving average, you've at least for the shorter term got away with at least turning down sharply. And here is the daily chart. Beautiful cup formation, left side, right side, price time action going to 206.97. We haven't seen it get there yet. Maybe today's the day. And then the higher high over here says that sometime in the next couple of weeks, there should be a test, at least an attempt to get to 211.88. All right, with that said, most importantly, what I want to be looking at here is that on a percentage basis, look, the RTY, I have to go to the futures right now, that gives you something a little different. We've made a higher high than on Friday. I hope so. Got to make sure that I haven't drawn that in right there. Yes, we have. So that's just on the futures. You can't take that away. Once it's done, it's done. This becomes a leg E, or it could be even an instant restart, because within 3 sessions of a peak D, if you make a higher high, you can start an alternate count, E/A, F/B, etc. So this is a very big positive on the very short term. Now, even more important is that if you look at this particular chart, have a look at this action here from the high that was made back in April to the low that was made later in April. Have a look at this. I'm going to go to the S&P. Keep an eye on the left side chart. Whoops, keep an eye on the left side chart as I type in the right place. There it is, SPX.X. And you can see that the S&P actually has a much stronger V-shaped pattern than the IWM. So as it stands right now, all I can say is that the Russell 2000 is acting very well, but it isn't showing leadership. That's the point. Until it really shows leadership, in other words, until it's paralleling what the S&P does, or even if it, let me just show you this IWC, which is the mini. This is the micro caps. Gone to peak A, peak B, peak C, and yep, there it is, a peak D. And what we're looking at, it has a same kind of pattern, but if you look at the IWB, and this is really fascinating, this is the 1000. It has gone to a higher high. It is paralleling the kind of action that you're looking at in the S&P. And I'm just saying to you that there's quite a way to go. But so far, the way the IWM is acting is very positive. I should also mention for subscribers, long.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, I just wanted to see if the Dow did actually slip negative, even if it's just very briefly. That's the objective of this particular technique. Dow Day's young. We'll see what happens. But in the meantime, so the Dow closed yesterday at, let's see what the close is, 39,431. And so far, the low today is 34,434. Very, very close. Very close. All it has to do is go negative, and then I get that particular indicator gets a plus. This is so interesting. I was busy clicking away, and I guess I clicked 2 clicks. I didn't even realize it was one. I had the futures that I had bought, but I thought, I can't. 2 of them contracts. I thought, I can't do that. Whoa, that was a mistake. If something happens by mistake, you don't want to own it because you didn't plan on that. So I got out of it actually turned out positive, but I got out. That you never know. You got to have your trading platform and your technical platform maybe in separate places. I don't. All right, so let's just do this. Right now, the Dow is up 22. Let's go to the cash. Here we go. INDU. The cash is up 27. It did flip negative for a brief moment. I just want to double check that. It went to 39,418, and yesterday's low was yesterday's close was 39,431. Okay, it's done its job. Now it can rally. All right. So I should also mention for subscribers, we've been long for a long time. We've added actually to the long in the Dow because it's at B. It should go to a C and a D, but this is going to be interesting. I've never seen a divergence quite as strong as this. When you go to the S&P, the S&P now is up 3.66 at 5225. Having made a peak D, the QQQ, having made a peak D, it's down 18 cents, 20 cents at 442.91. Nothing technically negative at this particular time. Looking at the SMHs, where are they? SMHs are down 37 cents at 222.90. I don't want to go, maybe in my show I'm going to do some more stuff when I'm looking at the semiconductors, but I did want to talk about this. Look, gold is in this cup formation, the very one I was talking about before. And it is working very hard, just walking the 9-period moving average. Look, it's just green there, barely green above the black 14-period moving average. And at the same time, look at the weekly chart, how strong that 9 over the 14 is. That is really strong action. Look at the silver. Silver in the weekly chart is also much strong. It's a very strong over the 14 in the weekly chart. Also has this cup formation. It needs at least to attempt a push over the high that was made. This is the silver contract at 29.00, round number high, recovery high on the 10th. It needs to go above that, actually close above it for this particular movement. Look, 1 bar rest after peak A, goes to peak B. 1 bar rest. Let's see if this is a move that actually by the end of the day struggles, even if it struggles to get over 29. 29.01 would be just great. Okay, that's within the context of that. If you go to the GDX, slightly different. It went to, look, 35.75 was the high back in April. And so far in May, we went to 35.88. So this is a leg B, a peak B, because yesterday was a lower high. I want to see, I don't want to just stall in this rectangle formation. I want the GDX, this is the gold miners. They've been, it looks like they're great, but if you look at the monthly chart, struggling at this Chapman wave inside track repellent zone. I want to see it pushing up over that. Now, I wanted to also show you something that I think is really quite fascinating. The TLT, this is bonds. Let me just get that to update right there. There it is. So the TLT trading right now up 27 cents at 90.62. Even with the news today that the inflation is still a little bit higher than the Fed would like, it's been stalled in this range. And this is what I had said to subscribers quite some time ago, that I believe that the rates are going to be in the higher range, but in a sideways move. Now, I'd be wrong if the TBT trading at 35.85 down 26 cents at 35.85, and the 9-period moving average is negative, and I have no choice but to put a sell signal. That's just a signal. It's not a sell mode yet. Sell mode is an upgrade of the sell signal in the daily chart a peak C in the weekly chart, having each time held very nicely this trend line. I'll make it a Chapman Wave inside track propellant line by putting that in, making that green, right there, making that green. We'll see if that holds over a period of a week or so. Could be less, but maybe it's more. You never know. Okay, the chart has to do what it has to do. And that just tells, you could talk about head and shoulders. I don't want to get into that right now. I'm just saying that all the technicals, every one of them, in the daily chart of the TBT, which is the ultra short Lehman 20-year Treasury bond ETF, is suggesting that yields should, this is basically, you're looking at a yield right now. If I go to the TNX.X, this is the 10-year Treasury note. Look at this, 44.65, 4.465, being repelled at the black 14-period moving average, and the pink is under the 14. Same thing. All this is negative. Pointing doesn't have to say how far. Other techniques do that, but it says that yields, in fact, are starting to come down a little bit. That, to me, is really important. All right, a couple of things that we want to look at right now is I was asked about if I could look at some of those high caps. There we go. Apple. Apple right now is up 1.38 to 187.66. Oh, did I miss that? Darn. 187.68. I have to look. It had a 187 round number high, so it's above that. It's gone to that leg D. That's what we were looking for in Apple. So now it's gone to the D. D is your objective in the buy signal to buy mode. Let's see what happens here. And it's gone to a B in the weekly chart. That's really important because it's above the trend line resistance. Now, what I normally do is I want the long wicks. That's usually what I start off with when I'm looking at a trend line. But if I'm to be accurate, I can actually say, look at that. If I'm raising it to the outside wick on that high that was made back in 2023, just under 200, and then the one that was under 200 back in February or so of this year, we're there. And if you're looking at the monthly chart, that 9-period moving average, even with the pullback, went green. Now, this is a weekly chart. So this is the first hour of trading. What am I saying, first hour of trading? It's the first 10 minutes, 7 minutes of trading. We're looking at the weekly chart, 9-period moving average crossing the pink, going from pink to possibly green. I have to wait for Friday. It's a weekly chart, but isn't that exciting? Finally, you've got that 9-period moving average in Apple starting to move higher. Look at Amazon. Amazon trading right now at, it's down 1.62 at 184.99, had 191.70 high, not an all-time high. That was at 188.65 back in July of 2021. I keep forgetting to do a left side, right side price time match here. I'll do that when we get back. Meantime, Amazon, the 9 is still over the 40, even though it's pulling back a little bit. And that weekly chart is still holding very strongly on the 9 over the 14. But the MACD's turned down, the stochastics at 79. It's just about 80%. That's okay. I'll be back. We'll talk about it as soon as I return. Basil Chapman, sitting in for Tommy O'Brien.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer, the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I'm going to look at Google. I'm looking at the Google L. I'm looking at the Google. This is the core shares. This is the Alphabet Inc. C shares. Trading up 5 cents at 170.95 at a 176.42 all-time high just about 2 weeks ago, late April, in a rectangle formation. And that, once again, says, well, you're holding well. Look there, right there. That's that rectangle formation. So as I look at all these different areas, and I'm going to go to some right now that are slightly different to what I usually look at, this is really important. So SLX is the steel ETF. If you look at the Van Eck Vector steel ETF, look at this rally making higher highs and higher lows with a small consolidation. It's in time. It's quite something, 6 months, but it's really just sideways. And if you're looking, you can see it in a bigger picture here. It did the H pattern and successful. It didn't take out the left side low of early 2024. And it didn't make an all-time high. That was 75, round number high. That was December the 29th. This is an ETF that makes a round number high. That's so unusual. So it pulled back to the 67s. That's a pretty big move. That's about 10%-ish. And then it's coming back. But the 9-period moving average is holding well. So this is steel. And steel is saying, if you're looking at the daily chart, overall, put it together with high-grade copper, and it says that there is some improvement in the economy. You can see it by the chart. Steel, after all, this is a cyclical, deep cyclical sector. It wouldn't be doing so well if things went bad, right? So it's doing quite nicely. It's got the potential for a cup formation. In other words, the H pattern was successful. Therefore, it could turn into a cup formation like that. But and that would say it would probably go to a peak D, and that would be above the 74 level that it was at in April. But right now it's at 71.76, and it's doing quite nicely. I wanted to point that out. I also wanted to point out that within the context of the overall economy, look, PAVE, that's the Global X U.S. Infrastructure and Development ETF. That's gone to your leg D. This is a leg D because we have to wait for a full day to see whether or not it breaks down and doesn't make a new recovery high. So this is a D, and remember the Chapman Wave methodology, you're looking for at least in a buy signal upgraded to a buy mode, and this is because the stochastics way at 92%. This is a positive, and it says that we are very close to the all-time high that was made at 48, a round number high. I can't believe these round numbers from 48 down to 37. That's quite a move down. And here it is back again. It's at 39.26. And that to me is the infrastructure that if this was failing, in other words, if this had hit 48 round number high, all-time high, and went down to 37.08, and then at that 38.50 area, it arched over and made that dreaded H, the pattern we were talking about earlier on, and then was now at 36. I'd say, this is a problem. Now, let me just do this live right now, left side, right side price time match, and I'll go from that high of 48 to the midpoint right there. That's the number of bars to the left can equal the number of bars to the right. That's the plumb line. I call that the plumb line. I'll draw it like this. I don't know if it's going to work because you have to do your homework, and then the chart does the rest. And this means that the number of bars to the right, it's a little aggressive, I think. So I'm putting it in, but I'm just saying way too aggressive. That would say within the next 2-3 days, it should have a big spike to the upside. It can happen if all of a sudden the numbers that have come out in the economy or the Fed, what can they say right now? I don't think they can say all that much. But this is what I'd be looking at. And I'd also have a Chapman wave inside wedge, target repellent line, and that would be going right. That's very aggressive. I don't know. That looks very unlikely. And that would say by the 16th, which is, I would say 16th is probably tomorrow, because 2 days time. Today's the 14th. It gets to the 48 level. I just can't see, but I do see it's a potential to test the resistance line, the Chapman wave inside wedge target resistance line, and that would take it to maybe 39.80 that was the high, 39.62, maybe just above 39.62. That's a possibility. We'll see. All right. So I've got that out the way. I want to just talk about the bigger picture that I'm looking at. I also wanted to show you this. Look, the dollar is down. The 9-period moving average has been negative, and the price hasn't been able to push above it. The MACD is negative. The relative strength is actually quite good. It's not bad. It's okay. And the stochastic's weak at 37%. So this is the dollar, and it keeps making these peak A, and then fails, peak A, fails, peak A, fails. Well, it hasn't failed yet. But I'm saying that the dollar is showing not tremendous weakness, but it's showing weakness. And if you're looking at the weekly chart, there's a chance I'm going to have to call this a peak C1, C2 top. I don't know yet, but so far the weekly chart 9 is over the 14. That's good. But wait a minute. If you look at the EUR, USD, the euro dollar currency pair, it's done that leg D. Remember we said buy signal to buy mode. It should get to a D, and that'll take it above the 200-period moving average. We've done that today. So there's your D. So that's accomplished what it needs to. From here on, you have to look at other technicals and reassess. But that 200-period moving average of 1.07 is trading at 1.081 right now, up 0.002. And that's a good sign. And it's just made a leg B in the weekly chart, but the technicals really haven't strengthened just yet. Now let's look at the USD JPY. There we go. This is the yen currency pair, the USD JPY. There we go. In a leg B. So this usually follows the trajectory of the dollar, not necessarily the exact price movement, but it has made a top of 159.98 in the daily chart. It's in a sell signal. It was upgraded to a sell mode. Now it's actually coming back quite nicely. So I'm not yet lifting the sell mode. I'm just saying there's a chance that it could be lifted very soon if it gets from 156.77 where it is, 156.38 where it is right now, up 16 cents to about the 157.35 area. I'll say, you know what? This is trying to work its way back up towards the high, not to the high, but towards the high of 159.98. So that's the yen. I wanted to just show you something else that I thought was quite intriguing. I looked at it yesterday and I wrote it down. So some of the IBB, I was asked about the IBB, and my contention has been that the IBB is in a range. That's the IBB is the NASDAQ biotech, but it's the microbiotechs that I'm seeing so many signs of, and they're very hard to actually trade. To get positions in, you need to have a lot of patience, and you have to do a little bit of homework in terms of looking at what is on the FDA approval list, etc. But in this particular instance, it has gone to a leg E, a very nice rally from the 123 level to 135. Hey, that's good. And now I want to draw this in. I'll draw it in. And when we return, we'll talk about this particular pattern, the Chapman wave, falling axe formation, basically a declining cone that gets broken to the upside. I'll be back in a moment. Dow's up 55.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So we're looking at IBB trading up $1.30, 135.71. This is a little too aggressive now. If you can't do the plumber right in the middle, and this is now, it's not just mathematical, it is visual. I would use this high right here, the 23rd, the April little peak A, as your plumb line, and that takes you out to late May. It could even be June, but to see this Chapman falling axis declining cone with lower highs and much lower lows, and then finally turns around. You remember the pattern I was looking at just a moment ago? Now it's in a new move to the upside above that trend line resistance, and that just suggests to me that the IBB NASDAQ Biotech ETF is moving higher, but it hasn't got the momentum, the power. It hasn't got that torque to really push it now in this particular phase right now into the 138s. It's a 135.72, but I could be wrong because it's walking the 9-period moving average. The stochastics at 91%. On balance volume is good. It's not overbought. Relative strength is improving. I'm just saying to move another, say, 3 points in the next couple of days. I've got this going out to the to Friday, maybe Monday, Friday or Monday, getting to the 138 level. So the question was, is this? So it's a BBH. Let me just check. Is that the BBH? Yeah, the BBH. Do I have to keep renotating this? Is the market vectors biotech? And that's not acting as well in the monthly chart, but it is also improving. Yeah, I think this is better at this point than the S&P biotech, the Nasdaq biotech ETF. And I would just say keep an eye on the 134 to 132 level for the next 2 weeks. That's the key support that it has to hold. Hope that helps. Now, another question came in, and where was it? Oh, yes, you had spoken about UNG the other day. UNG is, this is the natural gas, and it has gone to that leg D. I said there's a chance that for the first time we're going to see a whole move to the upside that takes you to a leg D in the natural gas. It's the wrong time of the year, et cetera, et cetera. That's not the point. It has been so oversold that look, even the weekly chart, I said if we can start closing above the 9-period moving average, which it's doing, that's going to be a positive. This is the first time you're seeing a little of follow-through strength in the United States Natural Gas Fund. That's a good. I'll be back. That was a